Ira, there's likely not to be too much change between now and the end of the week in terms of what those three major central banks are doing. But what should we be watching for that might move markets?
Yeah, I think some statement on the hawkish side from the Federal Reserve. There's been a couple of people who think that maybe we're nearing liftoff if we get some of the fiscal stimulus packages like tax cuts out of the Congress and Trump administration, then maybe the Fed could go faster. And I think on the ECB side could be interesting because if we start hinting at not a continuation in 2018 of the quantitative easing program that the ECB has been embarked in, that could also be a big market mover.
And then when it comes to actually, the Federal Reserve, there's this a big spanner in their works at the moment in the sense that they have no idea what kind of fiscal and tax policy we're going to get. And the most recent line on this is that it may not even happen until 2018, this corporate tax refurbishment, if you like. So what will the Federal Reserve do about that? Yeah,
well, that's one reason why I think that the Federal Reserve is going to err on the side of caution. So right now, I do think that we'll get probably 3 hikes, but they'll start in June and then go to the end of the year. So not an earlier hike. Because if there is an earlier hike, then the Federal Reserve can respond. It can respond by, instead of doing 3 hikes in the second half of the year, it can do 4 if their projections are for much faster growth and higher inflation impulse in the U.S. So I do think that at least you have to give it the first 100 days. So that's why I think March is probably off the table for the Fed right now.
And the Fed, of course, is waiting for the full impact of Trump's policies, Ira. Are we now discounting? You look at equities today. I know you're a bond man. Are we really beginning to discount the potential negative side of Trump's policies today?
Well, I think people are going to be talking, Mark, about more and more about what is the Fed reaction function to these various policies. If you get protectionist policies that end up harming growth too much, then the Federal Reserve is likely to be much easier. And it's unclear exactly what policies are going to come out of the administration. That's why I think it's a little bit too early to talk about a Fed going early. But that chatter's still in the market. On the other side, you have some people, some houses that I know think, oh, the Fed's not going to hike this year at all, or maybe they'll only hike once. I think that's being too pessimistic because you did get some readings this morning that inflation is nearing the Fed's target of 1.7%. Right now, core inflation is 1.7%. If that reaches 2, then the Federal Reserve might speed up just a little bit.
You mentioned the ECB, Ira, and we had the German inflation data today, of course, which was strong, 1.9%, strongest in 3.5 years. Is the debate within the ECB going to change this year? The debate moving towards, scaling back this vast QE program. Are we beginning to see a shift in the debate?
Well, I think that's what the market's going to be looking for. So what does Mario Draghi talk about in the press conference and, about timing of when we're going to start thinking about if we're going to continue QE into 2018? If he hints that, look, 2018 might be off the table in the not too distant future, then, yeah, clearly the markets aren't going to like that. You're going to get higher yields in, say, the German Bund, which in the, less than 1% right now have a lot of room to move higher. And that could really have some pain in the European bond market.
Well, speaking of yields moving higher, let's take a dip into my Bloomberg terminal. And you see chart 2693 is the chart. You see the dollar index and then, of course, the 10-year yield. So the next leg of the reflation trade is pulling up perhaps yields in Europe too. How far does it go, Ira?
Yeah, so I think we can see yields very close to 3% for 10-year treasuries, and that would certainly help the dollar. We do think that there's one more leg up in the dollar here, but at some point in the not too distant future, there'll be some impetus that is likely to change the direction of the dollar, particularly against developed market currencies. And that very well may be Mario Draghi talking about scaling back the QE program in Europe. That could really start to turn the dollar around.
In other words, you're saying the euro could suffer tremendously?
Actually, the other way around. So if the ECB starts talking about getting rid of the QE program, and actually that is a stronger euro policy, that would mean lower dollar, stronger euro, and that could be an impetus for the dollar to start turning.
And where
around.
In that case would the euro go?
Yeah, so the euro, it's not going to end up probably going up to 120, but you can wind up seeing pretty good 2-3 figures if Mario Draghi suggests that.